what's up guys? Alex here. Yeah, it's been a while since I've put a video out for the community, so I thought today I'll put a GU trade recap out. And so I do want to start putting out some more regular content, maybe once a week, either a recap or maybe something like a feature topic in the refine section. Either way, just something a bit more regular for you guys going forward. And so yeah, so I'll get into this. So basically, GU this week, there was there's a few trades available. A lot of them did seem to happen in London, and I'm currently just trading New York session. And so for me this week it was fairly quiet, but there was a couple of nice trades, and yeah, this one I'll go over today. And so just like with all of my trades, I always like to start on the higher time frames, build the bigger picture. Because if you think of yourself as an artist, right, or a painter, and you see in the bottom right or bottom left of a painting, they sign the signature once the painting's been finished, right? They don't sign the painting before they've painted the picture. And so it's the same with trading, right? You want to, if you think of the signature as your entry or your trade itself, you don't take the trade before you've built the bigger picture, before you've built the narrative of the story behind taking the trade. And so that's just kind of the way I like to think of it, a bit of a way to compare the two. But yeah, essentially the main point is that I want to start on the higher time frames. I want to know where we are in terms of daily structure. Are we bullish? Are we bearish? Are we pro trend, counter trend? What's going on? And so at the moment, you can see, I know in my previous video, if you've watched it, we were coming up bullish in terms of daily structure, and I kind of had my low as this and my high as this. And then so anything within this I was considering to be internal structure. In this case, it's kind of range bound price within the high and within the low of the daily structure. And so now we can see we've actually broken this low here. You can see, okay, the daily has switched bearish. And so that's the main point I want to focus on the daily. The rest of the story building can be built mainly on the 4-hour and the 15-minute, as those kind of like my bread and butter time frames that I like to use. But overall, daily is bearish, right? And so I'll drop down to the 4-hour, and we can see, okay, this is the overall daily leg. We've got the premium discount of this daily leg, and we then can look for potential zones within this daily premium, right, in terms of the 4-hour and the 15-minute. And so coming into this level, coming back up into these prices, we were putting in 4-hour bullish internal structure, right? That's a question of, okay, what is the purpose behind this bullish push, right? Is it because the trend is going to switch and we're actually going to continue bullish, indefinitely, or is the purpose of it just to act as a pullback in order to mitigate something within the premium of the daily range, to then continue and put in lower prices, continue with the bearish trend? And so at this point in time, obviously we don't know for sure, but what we can do is anticipate in terms of following expectational order flow. And so as we are coming into these levels, the way I had it marked was, we essentially had, if I just go back a little bit, in terms of the 4-hour, we broke structure to the upside here. We then mitigated the extreme of the demand level. We continued to the upside here. We actually failed to continue bullish and break this level here, so this became a weak low, and we eventually came back down to the downside. And so then we can look at, okay, where are now the interactions between supply and demand, where supply regained control of demand. Because at this point in time, I'll just zoom out a little bit, we were essentially reacting to this extreme daily demand. We then broke structure bullish, and then we reacted once again to this extreme 4-hour demand, and then we were putting in bullish internal structures to the upside. And so we could say, okay, demand at this point in time was in control of the market. And so where did that momentum switch? Where did supply then regain control of demand before eventually coming to the downside? And so we can say, okay, we respected this level of supply here, sure, that's fine. And in terms of the 4-hour, this is a bit more clearer here. We have this 4-hour demand, we have our reaction point to this demand, extreme of the reaction leg, and then the failure. So we can say this was my original 4-hour zone that I consider to be where supply took control of demand, that was visible on the 4-hour, right? So this was a level of interest for me in terms of looking for sells to catch the big move, to catch the next daily bearish leg, essentially. And so in this case, yes, we come higher than this level, which is fine, so we can look a bit higher. And so in this case, it's a bit more clear on the 15, so I'll just go down to the 15. Bear with me. Okay, so we can see this was the 4-hour zone that I was just talking about, right? And this is the zone above that. And so it's not just a random kind of buy to sell candle, there's a bit more logic behind this zone as well. The same with this. This was an interaction between demand and supply. So this was, in essence, a 4-hour flip zone, and in this case, this is a 15-minute flip zone. And so we can see here at this point in time, we were coming up with bullish intentions, like I mentioned, internally, and in this case, we sweep the liquidity below this low here, and the last point of supply, which takes out or which pushes price lower than this low here. And for me, yeah, in this case, it was this wick, or you could have the whole body, either way. We essentially sweep this liquidity, come back up, react to this supply, we have our reaction leg, and then the failure. And so at this point in time, this is our 15-minute flip zone, right? We then push to the upside, we start respecting, once again, supply levels to the left. And just bear in mind, this is happening after this initial supply mitigation up here. So supply has been respected here. We come back down into this demand flip zone. In this day, there was actually some nice intraday trades, some buys in London and then the sells in New York. And so basically what happened here is supply took control of demand. So at this point in time here, we're reacting to this 4-hour supply here, and we could say, okay, the first kind of flip zone we could potentially see was this level here, and we can kind of see, okay, yeah, supply is essentially gaining control of the market. We've reacted to this, and now we've had this flip zone, and this flip zone, most importantly, was actually respected. And so then we come down into this level, like I mentioned, and we can see that this point here, supply once again wins the battle over demand, and supply is heavily in control in terms of the 15-minute, and then at this point here, the 4-hour shift. So supply is just heavily in control at this point. And so these are significant areas of where the momentum originally shifted. And so like I said before, with this being the 4-hour, we eventually blew through this, and this was the next zone above. This is essentially a 4-hour, but it can be refined to this 15-minute, right? Because it's a 15-minute flip. And so if I go back to current price, this is essentially where we were reacting from. So if I just zoom back out, just so you can see it. We're essentially reacting from this 15-minute flip zone here, right? And of course, this one here was already mitigated, and we do still have this supply here, which we could eventually come into, but at this point in time, we were reacting off this. And so the way I was looking at it was, okay, we're reacting from this, but in terms of 15-minute structure, we were currently bullish, right? Because if I just go back here, we broke to the downside here, so we were essentially bearish on the 15-minute, and then we had this trend switch here. So the 15-minute became bullish once again here. And for me, I know people may consider these to be the swing structures, but the reason why I wouldn't is because if I just draw this on here, we basically have the high here, the low here. This here isn't now a higher high, and this here now isn't a higher low. It's happening within the leg, so it's internal to this leg, so it can't be the true structure. Of course there is structure, but it's not swing structure. It's happening internally. And so we now basically have this point here as the low and this point here as the high, and this is essentially just one bullish leg. And so then as we react from this supply, yeah, there could be some nice sells, but basically what happened was we failed to breach this low. We remained bullish. We started pushing back to the upside here with huge momentum, and this now potentially could be the higher low, right? In terms of the trend, we could have this higher low here. But what happened instead is, well, I should mention actually, I took a long all the way up here, and it might seem crazy because it's so high in the leg to be taking longs when we can consider that, okay, we're in this supply zone, we're reacting heavily, we're in this high time frame supply zone, and we're really high in the leg, so potentially people could be considering, for example, this to now be supply to then take shorts. And the reason I was happy to take longs this high in the leg was mainly due to the fact that my key thing with direction, right, in terms of knowing which direction to trade, it comes down to knowing where your weak structures are, where your weak highs are, where your weak lows are. And so if I can always position myself targeting a weak structure, so in this case, this was a weak high because it's failed to take out the low, and then we have demand taking back control of supply. And so at this point here, we can say, okay, this low here, sorry, this high here is actually a weak structure. And so, yes, we may get some reactions from these levels of supply all the way up the leg, but basically everything here now is weak. Once we've had demand regain control of supply after this attempted breach, we can say this high is actually a failed high or a weak high or a targeted high. And so that's exactly what we can do. We can target it. And so even though we're high up in this leg, we can still target this high because it's weak. And so this is why I took this buy here, right? And so I didn't know at the time whether, okay, is it going to break and continue or is it going to sweep? That I wasn't too sure on. The only thing I was sure on really was that we're going to come higher than this high here. And so in this case, we end up sweeping it, push to the downside. We then start respecting this level once again and start breaking to the downside, right? And then it's the exact same principle this time in the opposite way. And so this low here has now failed to break this high. It swept it, but it's not, in terms of structure, I like to see a body closure, right? And so this low here has failed to break this high with a body. So this is not a confirmed higher low in terms of order flow or in terms of expectational order flow. This is now, once we start seeing levels of supply being held and demand levels being broken, we can say this is actually a weak low. And so then during this day, we can continue to look for sells and once again target this level as our weak low. And so then what happens now, I'll just go back to the 4 hour quickly. You can see we kind of have, in terms of these demand levels, we have this 4 hour demand here, and kind of have this refined wick. It's more visible on the 15-minute, but this essentially now we're tapping into this 4 hour demand level, right? And just bear in mind as well, this isn't a higher low because it failed to take this high out. So the current 4 hour structure is, in terms of the low at least, is this low, the same as the 15-minute. The 4 hour, the high would be here. And so we're still bullish in terms of 15-minute and 4 hour coming into these levels to the left, right? And so we're reacting from this demand level now, and of course looking for buys naturally it's a great idea because we've taken this weak structure, we're within demand of a bullish price. And so this actually happened very late in the day, more towards Asia, so there wasn't really anything to be taken here unless you got in really late in the day. And then we can look for, okay, where are our supply levels along this leg to the left? And I mentioned it in a Phantom Outlooks channel, I think it is, or Team Outlooks channel. Yeah, it's Phantom Charts and now it's Team Outlooks. Basically, I put a big post of basically what I'm looking for in terms of types of POIs, and there's kind of three that I want to be focused on the most, or the ones that I'm more happy to be trading out of. And basically what they are is flip zones, so supply and demand interactions such as this. So we have a level of demand that comes higher than this structure, we react to this demand, extreme of the reaction leg is here with these wicks, and then the failure. So this is a supply and demand interaction or a flip zone. The other two, or one of them, would be a liquidity POI. I went over liquidity POIs in my previous video. Basically, it is a POI which has taken liquidity to the left and then broken structure. So in this case, this is a liquidity POI, this is a liquidity POI, and then finally the third one was extremes. And so in this case, you can see here, this is the extreme. The 15-minute would probably be here, but this is actually, I think, the 4-hour, I believe. Essentially, those are the three that I'm looking at. And so things like this, or just, you know, random kind of, maybe not random, but just candles like this that are like sell to buys all the way up and down the leg, there's going to be loads, right? And so it's just the way that I kind of refine my choice. And so if I know if it hits one of those zones, I know that I can confidently look for sells or buys, you know, depending on which direction. Whereas if you've got 1,000,001 supply and demand levels all the way up and down your charts, it's like, okay, we're in a supply, let's sell, and you kind of ignore the buys. And so yeah, and so in this case now, we can say at this point in time, supply was in control of the market, right? We reacted to this supply here, we've swept liquidity above this high, and then we have supply levels being held, we have liquidity being taken to the upside, so we have buy side liquidity being taken, continuing breaking structures to the downside internally, and once again liquidity being taken, supply overpowering demand. So supply is currently in control of the market, and so yes, we're reacting from this demand level, and we can be favouring buys potentially, but we can't also ignore the fact that supply is currently in control, and so we can look for the next level of supply, which in this case was this. And so during this day here, and this was actually during London, there was some really textbook clean sells, from this area. And the main thing really though is the fact that, okay, there were some nice sells and they were very high probability sells, but the main thing to consider now is, okay, these sells have actually still failed to breach this low. And so we've had this kind of bearish internal trend to, you know, the overall bullish price action, and what we can say is realistically, if this supply was to work out and to, you know, maintain its control in the market, supply is currently in control, really we should take out this low, we should breach this low. But what happens instead is we start respecting these levels here to the left, you know, pushing up once again. On the lower time frames, I'll drop down to in a minute, we can see we're respecting supply levels still though, and then we try once again and we still fail to breach this level here, and this can be kind of where a lot of losses can happen. This was, I think, was it yesterday or the day before, a couple of days ago, and it can be kind of where the direction isn't overly clear, right? And so like I said before, I like to kind of always position myself targeting a weak structure if possible, right? And so in this case, I was targeting a weak high. In this case, during sales, you could target a weak low. In this case, we potentially have a weak high here because it's failed to breach this low, but we also potentially have a weak low here because it's failing to breach supply, it's failing to breach demand, the structure highs. And so we kind of have both weak structures on either side of us. We have weak structures above us and below us, and so determining which direction to trade in isn't quite as clear as when you just have one. And so this is where now you can actually look for, if you did want to trade these levels, they can be trickier, but they are doable. And the main thing really is using the time frames, right? So we know at this point that supply was in control in terms of 15 minute, but what we can do is actually look for 1 minute and see, okay, we have weak structures either side of us, who's in control in terms of the 1 minute, and we can kind of look for the 1 minute interactions between supply and demand and determine who's in control that way. And so this was the kind of textbook cell I was mentioning before. We reacted to this 15-minute supply. We then have, a change of character here that sweeps liquidity. Sweeps liquidity here. And so for me, like, people might say, okay, we sweep liquidity here, why aren't you entering here? The reason being, I have mentioned it a lot in posts, is for structural liquidity specifically, I want it to break something. This high here hasn't broken anything. The low is here, it's not broken anything. This high here now has broken something, so it can be used as liquidity. And like I mentioned as well, kind of with my trading plan, I always want to see some level of liquidity being taken before the move. And so we take liquidity here, we react to this last point of demand. Same thing over and over again in terms of flips, where we have a reaction point, the extreme, the failure. And so at this point in time here, we can say, okay, overall, supply is in control. We're reacting now to a 15-minute supply. And then in terms of the 1 minute also, supply is also in control. It's taking demand. And so this here is an absolute textbook entry in terms of a flip after a mitigation, a liquidation. It's absolute perfect. The only thing for me is it happened, unfortunately, during London, I think 9:30 a.m. UK time. But this is absolute perfection of an entry, right? This is perfect for what I want to see, really. And so as this starts playing out, we can just briefly go over this. Basically, I want to always follow the interactions, right? So we have this break of structure here on the 1 minute. This is the extreme demand. We mitigate this extreme demand. We have our reaction point, the extreme of the reaction leg. So not the extreme of the overall move, the extreme of the reaction leg always. Same with this. It's now supply here. We push down. This is where supply took control of demand originally. We then push back up into this level. So the same thing, reaction point, reaction leg extreme, failure. So this now again is where demand on the 1 minute took back control. So on the 1 minute, it can kind of change hands who's in control a lot. So I don't want to just marry the 1 minute bias alone. I always want to factor in, of course, the 15-minute and the 4 hour. And if you can, try and align the 1 minute, who's in control with the 15-minute who's in control, like in this case, and that would be great. But yeah, so like I said, we come into this level, we come back down into this level now, into this demand. We knew at this point supply was in control here and also here, and so we react to this demand level. We're not expecting a big move off it because supply is in control. Reaction point, reaction leg extreme gets mitigated with this. So this is the extreme now, and then the failure. So supply is, heavily in control at this point. And then this is where we actually fail to breach the low, right? We start respecting these levels to the left, which is fine. And yeah, we start coming back up. But the main thing is now supply is still holding. So although we're failing to breach the low, we can't for sure say necessarily that this is going to be a weak high just yet. Because although we're failing to breach the low, supply is still holding at this point. So we can continue reacting to supplies and then continue the bearish trend. Once supply actually fails, then we can say, okay, potentially this is a weak high now. And so, like I say, supply is in control. We react to this. We then push up a little bit further into this. And last point of demand would be here. We react to this. So reaction point, extreme of the reaction leg is here, and then the failure. And so these were actually, I was looking at this for a potential entry, right? For me, like I say, I like liquidity to be taken. So once this was broken here, ideally I had some inducement and then mitigate this and continue down. But in this case, it kind of just, continued melting, which is fine. So we continue down. We then have this kind of 1 minute break of structure kind of thing down here. But the key thing again is we still haven't broken this low. So the low is still being respected, it's still holding. And so we've had this break of structure now. We can say, okay, where's the last point of supply which caused price to trade lower than this structure? And so the last point of supply would be here. There's nothing, you know, along here. I mean, maybe on the seconds charts, but really, we don't need the seconds charts, right? This is the 1 minute supply. We have the reaction point, the extreme of the reaction leg, and then the failure. And so now we can say, okay, we're respecting the low to the left here, and now demand is actually, in terms of the 1 minute, is taking control of the market here. And so this initial point where I was looking to enter here with this supply, whilst supply was at this point in time in control, yes, we get this huge, lovely reaction from, so if you did happen to leave your limit order on here, that's great. But when we get this reaction now, it's slightly different because demand is in control. And so what happens when supply is holding in a demand-controlled environment, you'll hear it a lot in commentaries, it's just building liquidity, right? It's just building liquidity to then be taken afterwards because demand is in control in terms of the 1 minute. And so, yes, we react to this supply, but I wouldn't then be expecting this here to go on and breach this low now. What I'm expecting now after this here is actually that this is a weak high. Like I mentioned, we've had now the demand take over supply after the failure to breach. And now we're respecting supply levels in a demand controlled environment. It's just building more liquidity, and you can kind of see it. It's just huge, this huge line all the way across, just building perfect mitigations or supply chain. And so supply trains are great if supply is in control to trade off, but if supply trains are there and demand's in control, it's just building liquidity, and it's gonna, you don't know in terms of which mitigation is going to fail, but eventually it will. So like in this case, we came higher. And so if I just zoom back out, this was the weak high, and like I mentioned, we knew that this structure here was weak, but we couldn't for certain say that this structure here was weak just yet at this point, because in terms of the 15-minute, this is a 15-minute high, right? And we hadn't yet broken or breached our 15-minute supply. So only once this has broken would I consider this high to be potentially weak. At this point in time down here, because we've had demand and control in the 1 minute, we could say, okay, you know, the 1 minute highs and this high here is potentially a weak high. And so we knew demand was in control. Like I mentioned, we start respecting this supply here now. We have huge reaction to this level here, and we eventually go on and break it. Huge momentum during London, which is great. And so then, realistically now, let's take this back here a bit. Realistically now, we've got 15-minute change of character here, or break of structure to the upside. We have our 15-minute leg, essentially is this. This now has the potential, let's draw this on, has the potential really in terms of order flow, it should in essence take this high and continue bullish if the order flow was to work out. And obviously we have early signs that it might not, because we're within the premium of the daily and we're reacting off a nice level. But realistically, this should take this high out, and the fact that it hasn't done so far, if it starts to break demand levels, this then becomes weak. And you can see where I'm going with this, right? Because this now would be a weak structure. And so if I just go back up here a second, actually, 1 second. So like I said, during London, we have this huge bullish momentum. We have our zones to the left marked out. This was a liquidity point. We kind of get a bit of sell to buy wick there, nothing really major. This one, we'll just zoom in. We have reaction point, the extreme of the reaction leg, and then the failure. We then mitigate the extreme, which is, you can see it's just this 4 hour wick. So on the 15-minute, the candle was tiny, right? I mean, we could have refined it, but either way, I didn't sell from up here anyway. If I go down to the 1 minute, So this is a 15-minute level here, right? And so we have the reaction point, the extreme, and the failure. This one also happens to be a liquidity point, takes liquidity, and then fails. So we mitigate this extreme, and then we actually have a shift in control once again. So we've mitigated the extreme, and supply has also now regained control of demand here, within this region here. And so then all the way up here, so at this point in time here, let's say we're here in price. All the way up here, I'm considering this low weak because we've failed to take the high out, and then we've had a switch in 15-minute supply and demand interaction in control, because this is a 15-minute level, 15-minute flip zone, and we've now had the change, we've had this breach of demand. And so it's not like in this case this was just a buy to sell, this was the interaction, this is what I wanted to breach, to confirm this was potentially weak. And so this here was the level, because I'm looking at interactions. So the same here, this is the level. So once this is broken, even though it's miles away, I don't realistically want to be buying off anything here, or if I do, it'd be short term as a potential pullback or a hedge if I was already in the short. I wouldn't then expect price to come into this and do this, or come into this and do this. I mean, of course it can do, but I always want to trade the same way, right? I always want to target what I consider to be weak structures. And so in this case, this would now be the weak structure. And so I'll go down to the 1 minute again. So we have a level of 15-minute demand here, right? We have a refined 1 minute zone kind of within this 15-minute demand level. And so it's perfectly valid to take buys off this. It's a great level to be looking for, because essentially we have a level of supply in here, because we have this where price turns around, it then respects this level here. So there is an element of supply within this level. We could say we push down, we take liquidity below here, and then continue to the upside. So it is a good level to be looking for. But the reason I wasn't overly keen on the longs is just purely because we've had this change in how I'd consider to be who's in control of the market, and I'd consider supply to be in control and a weak low below, like I mentioned. And so perfectly valid to take longs from here, and if this did work out, that's great. But if it came, for example, into this zone, I'd still then be looking for shorts. But in this case, we kind of just pull up higher, kind of respect this supply chain. This isn't overly what I was concerned with at the time. So even if this, for example, wasn't there, the main thing I want to consider is it's the same thing over and over again, right? It's reaction point, extreme of reaction leg, failure. So in this case, we have our reaction point, the extreme would be here, and we push down and we mitigate it, right? So this now, let me just change the color of this. Okay, so this now would be the extreme because it's mitigated this, and this is left unmitigated. And so this now is my zone of interest in terms of looking for sells. If this breaches, if this breaks, which it does. And so we can say, okay, the point broke here, and the demand itself broke here. And so then, okay, this is our area of interest for sells. What now do we need? We know supply is being respected, we know supply is in control. We now have our area of interest. What do we need? And for me, it's liquidity, right? The zone, either from the zone itself being a liquidity poi, where the zone itself takes liquidity. For example, this case, it takes liquidity below here, breaches structure. You could even argue this is a different type of liquidity poi. In this case, it's not a strong level of structure that's broken something, but essentially we have a level of supply. We trade lower than this structure here, grab the liquidity below here, and then push to the upside. These are two different types of liquidity pois. This here is just a push down, a push up. It's taken no liquidity. So then what do we need? We need some inducement, right? We still need liquidity to be taken before the move, and we've not taken any here, so we'll need some inducement. And so we push down here, yeah, we break the reaction point here, so now we can say, okay, it's a failed reaction, which is great. We push back up, just perfectly hovering just below our zone of interest, our supply zone. Not miles away from the zone, like I mentioned in a previous video, like if we have a supply zone and then we have inducement down here, yeah, it's liquidity, but it's not, for me, like how I'd want to see an inducement, because an inducement would be for where people are just getting in just a little bit too early and just get swept. And so it will have to be close to the zone, right? Or at least relatively close. And oftentimes you'll see it's just hovering perfectly, or just slightly below, or just slightly above a demand zone, or below a supply zone. And in this case, it's just perfectly hovering, below this supply zone based on the reaction extreme failure. And so basically the second this broke here, so once we were here, the order was on. The order was on, right? My order was already on at this point. And it, of course, it wasn't on here. And for two reasons, really. If I was to take this, why would this be the level I'd be looking at? I know it's essentially a buy before a sell, but it's not interacted with anything. It's not, this is an interaction with demand, and this is now the extreme of this reaction leg, which then causes the failure. This here is just pushed down, pushed up. It's not broken anything to the left. And so then now we've pushed down. There's no structure to sweep or inducement to sweep here either. And so when I see things like this, it's never really something I want to trade off. Like I say, I like to look for flips, liquidity poise, or extremes. This is neither of those three, and there's no inducement either. So you might see I draw these boxes on quite a bit. There's no structure in the leg. The POI itself doesn't take liquidity, and so the expectation would be this is going to fail. And it's good because I'm expecting it to fail because my zone is above. And so I'll just play this on. Okay, and so here, it didn't initially tag me in to the entry. It didn't actually tag me in with the limit order straight away. So I actually market executed. It was kind of around here. I market executed. But then what happened is, literally a minute later, it did tag me in. So I actually ended up in two positions, kind of by mistake, because I had a market execution and the limit order itself tagged me in. I didn't really have time to delete the order. So I ended up in two, which is fine because it's, for me, this is like a textbook style entry for me. And so as long as you've got a plan in place and you know you see something show up in the market like this and it's screaming at you to take. For example, for me, we have our reaction, extreme failure, and inducement. For me, it's like my plan personally is absolutely textbook, and for these style of entries, there's just no hesitation because it's just a perfect textbook example of your plan. But if you don't have a plan in place, you don't really have that kind of overconfidence to, okay, I'm going to set a limit kind of thing. You maybe do it, but you're kind of fearful. And yeah, I just recommend getting a plan in place, whatever it is. It doesn't have to be exactly like mine or like any other coaches. It can just be something that you can repeat over and over again with confidence. That's the main thing. And so if I just play price on, in terms of management, getting to break even at 4R, I make a decision, right? So I don't necessarily always take partials. Sometimes I will move to break even, and it will depend on whether there's an unmitigated zone or supply level in this case hovering around my entry point that could likely come back into and get tapped, and I don't want my stop loss to be here if that's the case. And so if that's the case, there's an unmitigated zone, I'll take a partial 20% at 4R. If there isn't a zone, like in this case, we're kind of pushing out correctively, it's kind of all efficient, I'm happy to actually trail, put the stop loss itself at break even and not take a partial. And so then in terms of taking profit, like I say, this for me is a weak low. And so this is my initial target. And so the idea was to take the majority off at this weak low, but also keeping in mind the higher time frame. If this level here, this demand level here, does actually break, which potentially it could because of where we're reacting from, the potential then, if this breaks, is all the way down here. It's huge potential. So I wanted to leave something on just in case this did break. And so I'll just play this on. Yeah, so like I say, anything reacting off these levels, you might get a pullback, but I wouldn't then expect this to do this because I'm expecting this to be a weak low and to get broken again, the same way this, whether it breaks and closes or just sweeps it, either way I'm expecting us to come just lower than this price at minimum, right? And so yeah, we kind of get a bit of a pullback during Asia there, we get a liquidity sweep here, and then we continue to the downside and we hit this target, which is great, right? It was 20R. I took majority off here and like I say, left a little bit running, left my stop loss at break even up here. And then this is kind of now the last line in the sand, right? The last point of defense if we are going to continue bullish, because it's the extreme demand and also this high, it's not really formed great, right? It's kind of like equal highs. It's not like a pivot. And so it wouldn't surprise me if this did do this, but like I say, the potential was there. I wanted to leave some on because it doesn't have to do that. And so then I just want to mention this actually as well, because I saw people selling off of this 15-minute supply, right? And right, there's no harm in it because it is a 15-minute supply, and we could say, okay, maybe it's just a bit low in the leg as like one kind of confluence against it kind of thing. And it might sound contradictory because I took a buy really high in the leg here. What's the difference? What's the difference between buying here and selling here? And there's one massive difference, and it's a huge one, right? Because here we are targeting a weak high, a targeted high, a weak high. This is weak structure. If we sold low in the leg here or here or here, it's fine because we've got this weak structure here. Selling low in the leg here, we're selling into a very strong low. This isn't a weak low that we're targeting. This is a strong low. So we're targeting a weak structure here. We're targeting a weak structure here. If you're selling from here, you're targeting a strong structure. And so we've reacted off this strong structure now. And so the chances are we're going to blow through this and come into higher prices. And so it's just a little difference, like, because they can look similar, but it's just one thing to consider. Where are the weak structures, right? And yeah, in this case, I'll just play it on a little bit. Yeah, we just mentioned this. We have this flip zone here. Supply took control of demand, or regained control of demand here, or sorry, maintain control of demand here. We kind of respect it, failed to breach this low. Selling off these, again, it's weak structures because it's failed to breach this low, so we come higher into this zone, which is fine. But we've already broken supply now, and so we can say we've respected demand, we're breaking supplies, we're failing to breach the lows. Any reactions from these supplies now are likely just pullbacks instead of maybe continuing all the way down. And so in this case, yeah, we start pulling back, I believe. And then, yeah, continues to break to the upside. Once again, we've broken this supply, there's a supply here. Chances of it holding, not the greatest. I wouldn't expect maybe now this to break this. I mean, it can do, but like I say, likely just a pullback. It is a 15-minute liquidity poi. This is a 15-minute flip zone, so likely we will get reactions from these zones because they are kind of one of the three significant zones. Like I mentioned, extreme, liquidity poi, or interaction. It's not a random buy to sell candle, and so it is actually doing something in the market. Like in this case, it's taking liquidity. In this case, it's reacting or interacting with demand, whereas a buy to sell candle in no man's land isn't really doing as much as these types of zones, if that makes sense. And so yeah, I think that's pretty much it. I think I went on a few tangents. Yeah, essentially, I think it took me out in the end for break even. Well, I didn't take a break even, but the actual trade itself was majority off at 20%, and then the rest was break even, if that makes sense. And yeah, so like I say, I'll try and do these recaps more often. I'll try and do something, some form of content, once a week. And yeah, let me know if you have any questions. And yeah, I'll see you in the Discord. Take care, guys. Bye.